Hello traders, welcome back to the channel. In this episode, you learn about two important concepts in smart money trading strategies: liquidity and inducement. Liquidity refers to the presence of orders making it easy to buy or sell an asset. It is found on the swing highs and swing lows, and also around supply and demand zones. Inducement, on the other hand, is the act of tricking buyers and sellers into making a trade or entering a trade. So if you haven't subscribed, please go ahead and subscribe. Make sure you like the video, and please make sure that you watch the entire episode. Thank you again. Let's get into the charts. So here we are. As usual, we're gonna go use the illustration here. Let's say the price is making higher highs, higher lows in an uptrend market. Okay, all right. All right, here we are. Okay, so liquidity is found around every swing high or swing low, or around supply and demand zone. So in this case, the price is making higher highs, higher lows, higher highs, higher lows, and then higher highs. Okay, higher lows and then higher highs. So where's our liquidity zones here? Let's say we have low here. We have a higher high breaking the structure to the upside, and then we have our higher low. Also, okay, after the break of this structure, we must have some type of demand zone somewhere here. All right, so let's say we have a demand zone somewhere here. So where's our liquidity? The liquidity is already created, so liquidity is going to be this one here. Okay, this swing low, this is going to be liquidity sitting here, because a lot of people are going to think that the market is about to reverse. So they're going to start buying around this area, trying to target this zone. So they put all the stop loss over here. Okay, they put all the stop losses over here, and then what happens is the price is going to come back, take them out. Okay, come back to, fill this space here, and then price is going to reverse around this demand zone and go to the direction that they expected. But the stop loss is already triggered, so that means they're not going to be in the market anymore. All right, so now we have the price making higher highs, higher lows, taking out this liquidity zone before the hit of the demand zone. Market goes up, breaks another structure here. So here we have another break of a structure. Okay, after that break of a structure, the price created higher low and then high high. So where's our demand zone and the liquidity zone? So here, around here, before this break of a structure, there has to be some type of demand zone sitting here. Okay, so once we mark our demand zones, the liquidity will be this one right here. Why? Because this is not a major swing point. So basically what it did was they created a swing low and then a swing high and then a down move. Also, this is our liquidity before the reverse from the demand zone. So now this is your liquidity again. Okay, I'm trying to teach you guys as easy as I can. I don't want to complicate you guys or make you confused, because a lot of YouTubers that I've seen, they make it very confusing, and that a lot of new traders or even advanced traders don't understand what liquidity is. So I want to make it very easy. Okay, so like I said, price was creating higher highs, higher lows. So before the reversal from any demand zone or a supply zone, there's always this liquidity area that's created before the reversal. So price created this liquidity, take it out, went up, broke another structure, came down, created another liquidity. Okay, now reverse from the demand zone again. There's also liquidity sitting on the high of this mini swing high here. So there's also another liquidity sitting there, and there's also another liquidity sitting here. So there's always liquidity sitting around every swing point. Liquidity here, liquidity there. Okay, there's also liquidity that's sitting here, another liquidity that's sitting here, liquidity sitting here. Liquidity is basically on every swing point. Okay, so higher highs, higher lows, there's a liquidity sitting here, and then there's higher high, higher low, there's a liquidity sitting here, and there's also liquidity sitting before the reversal of the demand zone. Okay, so this is what is called liquidity. So let's say you want to buy, let's say that you are trying to enter a trade or buy a trade before, after it hits a demand zone. So basically what happens is after we have this structure break here, a lot of traders, they think that the demand zone is somewhere here. Okay, and then they're going to start buying. They're going to start buying from here. Okay, they will take the trade right there, trying to target this high. So where do they put their stop loss? Below the so-called demand zone that they think is the demand zone, but it's not. So they put the stop loss over here. The market comes back, creates this liquidity zone, try to pretend like it's going up, which is called an inducement. So they kind of trick the buyers and the sellers, pretend like the market is basically ready to reverse. So now they kind of like create this little pattern that a lot of traders think that, hey, you know what? I think now we're in a buy position. So they start buying, putting their stop loss somewhere here. Okay, so what happened after that is they're going to be taken out because there's a liquidity sitting here. So the market is going to come back, retest the actual demand zone, and then continue going to the direction that where they think the market is going to go. So this is called liquidity trap, and also it's called inducement. So inducement is tricking the buyers and the sellers getting into a trade. So now let me show you guys how it looks like on a sell market. Okay, let me clean this up. Let's say this is a downtrend market. Okay, price creating high, low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, so here we have a break of structure right here. Okay, so after that break of structure, our demand zone is somewhere here most of the time before the break of structure. Okay, so now that we mark our demand zone, where's the liquidity? So liquidity is this swing point. So there's liquidity sitting right here before the reversal from the supply zone. From the supply zone. Okay, so supply is when the market is selling and the demand is when the market is buying. So there's a liquidity sitting here before the market reverses from a supply zone. So what they do is after the break of structure happens, the price is going to come back, pretend like the supply zone is somewhere here. Okay, pretend like the supply zone is somewhere here, and then a lot of traders, when the price gets to this zone, the market makers or the institution traders, what they do is they create this mini structure highs, pretending like the market is about to reverse from this so-called supply zone, which is not a supply zone yet. Okay, so a lot of traders are going to be entering this sell position, putting their stop loss above this zone here, and they're targeting this swing low. So what happens after that is the market is going to pretend like it's going down, creating an inducement, okay, which is tricking them to sell this price, and then it's going to go up, clear them out, take their stop losses, and then continue reversing from the actual supply zone. Okay, all right. So over here again, the market is creating lower highs and then lower lows. Okay, breaking this structure here. So now that we have another break of a structure, what happens is the market is going to go back, create this inducement or liquidity zone. Okay, so a lot of traders also now thinking that, hey, you know what, now we have the the mini move, the market is about to reverse and continue to the downside. So what do they do now is they're gonna start buying from somewhere here, thinking this is the actual supply zone, and then they're gonna put their stop loss around this area. They're gonna put their stop loss around this area, targeting this recent low here. So what is going to happen is the market is going to create this low, pretend like the market is going down from a supply zone here or a order block, and then go up, clean them out, and then reverse from the actual supply zone, which is around the low high here, and then continue to the downside. All right. So basically on every swing points, there's always a liquidity sitting. So people sold from here, so there's a liquidity sitting here. Also, there was a selling pressure that was happening here. There's another liquidity sitting here. There was also another liquidity sitting here. There was a liquidity sitting this lower high, mini lower high. There's a liquidity sitting here. Like you see, the market just cleared it up, took off, taking all this liquidity that was sitting here because there was a lot of sell orders. Buy orders. That was sitting here. So there's another liquidity right here, another liquidity right here, another liquidity right this here, this area. So there's basically liquidity sitting on every swing high or swing low, or before any reversal happens around supply or demand zones. So now that we see this on the illustration, let's go to the real chart and see how it looks like on the chart. Okay, let me clean this up. All right, I'm gonna be analyzing on GBP USD using the TradingView platform. All right, here we are. Let me fix this. All right, I didn't know that I inverted the chart. All right, let's see. The price was going down. Let's start from the seller market. Okay, before we go to the buyer's market, let's start with the seller's market. Okay, so here we have liquidity sitting here because there's a swing point, swing high. There was liquidity sitting here. Okay, there was a liquidity sitting right there. So price give us the break of structure, giving us higher high, higher low. This higher high took this liquidity sitting that was sitting right there. Okay, and they created low and higher low, and then another higher high. All right, right there. Okay, let me zoom this out. Price created this change of character, giving us that this high low that gave us that high high was taken out. So now we have the price giving us change of character and then going down. Okay, so there was a liquidity sitting here, was taken out. The price went up, clean out all this liquidity that was sitting here, and then continue going to the downside. Okay, breaking this structure here. So now we have another break of structure here. So where's our liquidity again? There was another liquidity sitting right here, that swing high right there, because a lot of people think, oh, this is an order block, because they think this is a break of structure on the lower time frame, and then they're gonna, when the price reverses, they're gonna think that they're gonna they're gonna start selling from here, and then they're gonna put their stop loss somewhere here. So now the market is gonna come down and then create a swing high, taking out all their liquidity or stop loss that was sitting right there before the reversal. Okay, now we have another break of structure here. We have another break of structure here. So where's your liquidity? Okay, price created another break of structure, creating an inducement. You know, a lot of people, or a lot of breakout traders are going to be selling, you know, putting their pending orders somewhere here before the break of this structure. Okay, so what they're going to do is now they're going to put their stop loss somewhere here. Okay, so what happens? The market is going to come down, pretend like it's going up, triggering their orders. So once it triggers their orders, it's going to go up, take out all their stop loss, and then continue to the downside after it hits the supply zone. Okay, so the supply zone is right here. So what happens before the tap of the supply zone? There was a liquidity that was sitting here too. Okay, that was taken out, and the price continued to the downside. So now we have another break of structure. We have another break of structure going down. Okay, created an inducement where people think that, hey, you know what, I think the market is going to continue going down. So now all the breakout traders are going to start selling once they see this bearish candle. So they're going to put their they're going to place, they're gonna set a limit order here and then put their stop loss somewhere here, okay? Trying to continue targeting this zone. So what happens after that is the market is gonna come down, go up, take out all their stop losses, and then continue to the downside. Okay, continue to the downside. So you can see it here. There was another break of a structure, but before the market reversed from this supply zone, where was your liquidity? Your liquidity was, all this was your liquidity right there, because there was a lot of people that was selling from here at the same time, thinking that the market is ready to reverse from somewhere here, and then they start selling, putting their stop losses above this area, and then the market is going to come up, clear them out, and reverse from the actual supply zone before it continues to the downside. Now we have another break of structure. Okay, now that we have another break of structure, where's your liquidity? Okay, so a lot of traders again are gonna think, you know what, hey, now we have especially the breakout, breakout traders, most of the time they are the ones that are hunted most of the time, because they basically place their orders once the price breaks a swing low or a swing high. So now they set a limit order trying to sell the market, and the market is going to come out, pretend like it's going down, go back, clear them out, and then reverse from another supply zone somewhere here. Okay, so the market is going to continue going down, taking them out, and then continue down, going to the opposite direction. Okay, I mean the same direction that they thought, but they get in very early. So we have another liquidity hunt right here. There was another liquidity that was sitting here. The price pretend like it was going down, created this mini liquidity here, and then went down, reversed right away, taking out all the stop loss that was sitting here, and then continued to the upside. So now here we have a change of character. Okay, now we have our change of character somewhere here, because the market was creating lower highs, lower lows. So now it gives us a change of character, creating a bullish pattern. So where was your liquidity here? Your liquidity was all this area was your liquidity. Okay, this is all your liquidity. Okay, so the market has to reverse from demand zone when it is going up. So there's a demand zone here. Your liquidity was right here before the reverse from the demand zone. Okay, so the price came down, pretend like it's ready to reverse from here. People started trading, taking trading from here, and then putting their stop loss somewhere here. So now they get triggered, and the market came down, took out all their stop losses, and continued to their direction. Okay, same thing here happened. Okay, it created some type of little bit high. Okay, and then it came down all the way low. Okay, high, low, and then high. We have another break of structure here. Okay, so where's your liquidity in this case? Your liquidity will be somewhere here. Okay, so now the price is reversing from another demand zone. We have another break of structure, another BOS. Okay, creating this high, but where was your liquidity? Your liquidity is all this area is liquidity now. Okay, now the price is going to reverse from this demand zone. Before the reversal from the demand zone, there has to be some type of liquidity or orders sitting, stop losses sitting here. So there was another liquidity right there before the reverse from the demand zone. Okay, price came down, took out all the liquidity that was sitting here, and then reversed to the upside. Also, there was a liquidity hunt somewhere here. So what happens is also price pretend like it was going up, breaking the structures to the upside, clearing out all the stop loss that was sitting here, and then reversing from this higher time frame supply zone. Okay, reversing from this higher time frame supply zone. All right. Price creating, breaking the structures to the downside. Breaking structures to the downside again, creating a lot of liquidity sitting here, a lot of liquidity sitting here, here. What happens after that is it took out all the liquidity that was sitting right there before the reversal from this supply zone here. Okay, so there's always a liquidity sitting on every swing high and swing point. Also, now there's a lot of liquidity sitting this swing higher low, this higher low, this higher low. There was a liquidity sitting over here. So there's a lot of liquidity that's sitting here, so that needs to be cleared out. So the market, now that it took off, it took care of all these liquidity zones, now it's gonna probably come back and, you know, clear out all these zones. Okay, taking out all these lows. All right, and then continue to the downside. Okay, so guys, if you like the video, make sure you smash the like button. If you have any questions, please put it in the comment section. I appreciate you guys. Thank you very much. As always, let's make this year the best of our trading career. Thank you again. Have a wonderful trading year. Peace out, guys. Thank you.